G'day, Internet. Max Wright here, and I'm super excited to have our guest today. He's involved in one of the senior developers of one of the most important, I think, as well as exciting projects in the entire crypto space. I'm talking about THORchain. Chad Barraford, thank you so much for being with us.
Thank you for having me. Always glad to be here.
Great. So, for those of you at home who are not familiar with THORchain, I want to kind of kick off the show here by talking about how important I think it is. There's not much that gets me excited in crypto much. I'm very much a Bitcoin disciple, been super excited about it. And I'm aware of hundreds and hundreds of other projects, and I've made money with hundreds of other projects. But nothing I think is as important as THORchain. I think THORchain is unbelievably important to the crypto world. And I'll try and sum it up in a sentence, and I'm sure Chad here will do a better job, who's had more chances to think about it than I have. But Bitcoin brings something very, very special to the world of money and currency. Is decentralized money. But then the moment you go to use it in almost all circumstances, you're going to have to start interacting with the old legacy world. And a very, very important step for us to move beyond that is to turn all of the other things that we do, take them away from centralized exchanges, and take them away from all of those kinds of centralized entities. And then we can do that in the world of DeFi as well. And so what THORchain does that, but cross-chain. So native Bitcoin can swap with native Ethereum and native USDT and native BNB. So it is a cross-chain decentralized DEX. And I want to kind of, we talked about THORchain a lot on this channel, so I don't want to go too deep into it, but I wanted to give you a high-level start. Chad, is there anything else you want to add to that to speak to the importance of THORchain?
Yeah, man, I think you did a pretty good job at it overall. It's a critical component that we're missing in the space that we predominantly rely on centralized exchanges to be the conduit to allow us to transact from one place to the other. It's a little bit of a silly notion, right? Considering where we're starting from and where Satoshi started us from, and centralization, self-sovereignty, and liberty, like all these things that we all very much value us in the space, and yet we are still reliant on centralized entities that oftentimes, are corrupt, like FTX, for example, and even Binance is having its kind of day in the shadows of, let's call it questionable activity. Let's just say it that. And so it that proves the point that having a decentralized way to move across chains in a way that's verifiable, in a way that you can look on chain and see, oh, I know all the Bitcoin is there, I know all the ETH is there, all the Doge, all the BNB, all the Atom, all the AVAX, whatever. That you have that complete online, chain verification is like really valuable for the space. Like we desperately need that. We've seen that so many times, like from like Mt. Gox and Quadriga to like most recently FTX and other ones. So just like we need that clarity, we need that transparency, we need that crypto verification through cryptographic methodologies. That's a very important thing that I think that THORchain is providing for the industry as a whole.
Yeah, completely agree. Like Bitcoin brings honesty and integrity to money. And then we see, other things like Ethereum and others, they can create a little ecosystem within themselves that there's honesty and integrity. Scope of things that can be achieved in Ethereum is larger than the scope of things that can be achieved in Bitcoin. And then you've got THORchain come in here and it says, well, okay, we're not going to compete with any currency. We're not going to compete with any other tokens. But what we're going to do is increase the scope of things that people can do on all of those different chains. And I love the fact that you guys aren't competing with anybody. You're friends with everybody, and everybody can join in with the THORchain and start swapping back and forth and have a decentralized, trustworthy way to exchange our tokens from one to the other. It's just unbelievably important for the system. So, okay, I think we've kind of covered the importance of THORchain. Now, the last time you were on the channel, let me think, was it almost about a year ago? I think the value of Rune token was on its way down, as was everything else in the world of crypto. And I was telling guys, keep your eye on this thing. At some point, you want to Rune is unbelievably important. The team's amazing. I've got very, very high hopes for this particular project. And we've just kind of seen in the last month or two, a lot of things kind of came together and clicked for Rune. We saw the price kind of go up from around 80 cents to $6. And this is just, but it's not born of nothing. It wasn't like a random pump. It was born from something that, from basically the usage of it. You saw volume spike. So, this is a DEX. It is a decentralized exchange. There is volume on there. And why don't you go through a little bit and brag a little bit, boast if you don't mind, on what's going to happen. Talk about the numbers, talk about how much market share you've achieved, and just talk about how important Rune has become in the last, well, THORchain has become in the last little bit.
Oh yeah, well, we saw a massive kind of adoption, right? And I think that's largely because we implemented a new feature that gives extremely highly efficient capital efficiency of the network. So when you do a swap, the price execution is not just like a good price execution, but better than sex that you can think of, right? Like we can.
Well, so hang on a second. Sorry, Chad. It just cut out during like a really key sentence. Can you just repeat that sentence for me?
Absolutely. Yes. So the way that this new feature called streaming swaps, what it does in some sense, it gives you just really good high execution on price, right? So much in that it just literally targets a 5 bips fee when you do a swap. It doesn't matter if it's $100, $1,000, $1 million, $5 million. Doesn't matter. It will execute at that same 5 bips. Well, at least make this efforts to do so. And by doing so, you're actually outperforming from a price execution perspective and even time perspective, technically as well. You're outperforming Coinbase. You're outperforming Binance. You're outperforming Curve. You're outperforming Uniswap even, right? Like you're actually performing better trades than almost every CEX and DEX out there, which is quite quite an improvement, quite an innovation, I would say, right?
I would say it's absolutely remarkable. Like
it's pretty.
I remember talking to you like a couple of years back, and some of the other guys in the team, and it's like because I've been in crypto since 2012, and the magnitude of the problem to try and solve cross-chain swaps. I mean, we people would, the best and the brightest were going at this for years and years, and atomic swaps, and I know the whole history of it. I know how hard it is. And then I know how expensive it was when it was finally achieved. Yep. And now you've got it down to the cost is better than centralized exchanges. That's just blowing my mind.
That's literally what it was. And that's why we moved from like, I think it was like the 11th or 12th largest DEX in crypto to the third. We surpassed Curve, right? We're doing, 200, 300, $400 million days in terms of transactions. Even if you look at Bitcoin alone, now like before THORchain, there was no Bitcoin trading and on a DEX, like this didn't exist, or at least maybe like a little tiny itty bitty, like barely even measurable on the Richter scale. You know what I mean? In a sense. And today we're doing about the same trade volume of Bitcoin as like Kraken. I think we're like about the 5th largest exchange, not decentralized exchange, just 5th largest exchange in Bitcoin spot trading volume. All because the price execution of that trade is so efficient. It's highly competitive with Coinbase and Binance, even like competitive against like OTC desks without needing to trade like, $300,000 transactions. You can still get remarkably good price execution. And so that's what changed for us. And that's why we moved from, a dollar figure to a $7 price tag on the Rune token, right? We also moved, the liquidity jumped up with it, right? So the amount of TVL, the amount of trade volume we mentioned, the amount of income versus expenses, right, on the chain itself, the number of unique swappers, almost every metric that you can reasonably think so is going up and to the right, largely because of that innovation of streaming swaps.
So maybe let's talk a little bit about how that streaming swaps, just from a high level, let's not go too much into the weeds, but let's talk a little bit about what that innovation was. How are you achieving swaps now with streaming swaps?
Right. So think about it this way. So when you have a trade passing through an AMM or passing through a pool, you are going to affect the price in one direction or the other, depending on which direction you're going, right? And so what streaming swaps is doing is that it's taking a larger trade and then breaking up into like little tiny sub trades, right? And executing them, maybe every block or every other block. You can choose how fast you want to execute. It can be as fast or as slow as you want. If you want to use this to DCA, dollar cost average, you could totally do that if you really wanted to. But the idea is that when you make a larger trade, you push the price a lot, right, with that larger trade. But if you do smaller trades, just a little bit, and you allow arbitrage blocks to arb the pool as you're passing through. So you do one small trade, arbs correct the price, one small trade, arbs correct the price, kind of like back and forth, right? Kind of not battling with the arbs per se, but the arbs are helping you to get much better price execution by correcting the price intra-swap, if you want to call it that, right? Mm-hmm. And so by doing so, you get amazing price execution. So like We had a very extreme scenario a few weeks ago. We had this crazy thing where somebody tried to swap $6 million of Bitcoin in a single transaction into WBTC. Now, the WBTC pool was only about $4 million deep for a $6 million trade, right? Crazy. Normally in an AMM, you would get absolutely wrecked by that. You would get barely in anything. You would walk out with half of what you got. You would have lost millions of dollars in that particular trade. But because of the way streaming software works, it allowed the ARBs to ARB and put the WBTC back in as they were taking it out and ARB that pool back, in more or less in live time, right? That allowed him to correct the price as the trade was happening. So for the guy got, in the end, he got about 45 bips on that swap of a $6 million trade in a pool that had $4 million deep. That's unheard of in the AMM space. That's, if I would tell people this, they would laugh in my face and say how ridiculous you must be. And this whole thing is a fucking lie and you're a scammer and all these shit. But literally, you can go on chain and actually verify the things I'm saying. I'm not just making up some bullshit. It's literally on chain. You can verify it.
How long did that trade take?
Good question. Because it was such a huge trade and a relatively small thing, I think in the end it took around like 20 hours, a very unusually long period of time, but still had that great price execution.
Gotcha. So I'm going to guess from that data point that the streaming algorithm will choose price over a time.
Yes. So in that particular case, because you're going like to like, you're going from Bitcoin to WBTC, which those two assets, generally move in the same direction. There's not much risk in terms of like price changes because those two assets are more or less priced the same, but by design, right? But yes, you could be exposed if you're doing a 20-hour trade. You could be exposed to price shifts and changes over time. You can still set up like limitations, like, hey, I'm giving you X, and I want to get a minimum of Y back, right? You can specify like how much you want to get back. So if the price moves away from you, and for some reason something happens in the market, I don't know, whatever, right? The network will execute as much of the trade it can at that price that you want, and then just refund you the rest of it. So it might get you the first, half of it, and then you trade it all the way through, and the other half will just be refunded to you back the Bitcoin that you sent in, or whatever the asset was that you sent in. So you have the ability to control kind of like how it's executed, right?
Yep.
Or if you just want to say like, I'll make a huge buy over the next 20 hours, 24 hours, whatever you want to do. And I just want to DCA. Like I just want to follow the market, right, and just kind of move with the market. You can do that too if you want to do it. It's up to you, your choice.
I see. So when from the usability now, are the old legacy swaps still available, or is okay? And like from a UI perspective, is it a generally, I guess, because THORchain doesn't, it's not officially doesn't create its own UI, is that right? There's a number of different people out there creating UIs. So I guess there's no official answer to this. But if I want to do the streaming swaps, is it fair to say that most of the wallets that have integrated THORchain have integrated streaming swaps? Is that fair? And is it streaming swaps by default, or do you have to go looking for it?
Yeah, there's actually been debates in the community about turning streaming swaps on as a default on the protocol level. Like you can do it within the UI. You can configure your kind of like the memo that you send the transaction with, right? Of giving the specifications of how you want this thing to be executed.
Yeah.
But like you can specify just do a regular one-time swap, just get it through. I'll pay the higher fees. I don't care. Just make the trade. Or you can say, I want just me the best price execution you can possibly give me. Just get me the best you can get. And you can choose either or. And there's been this push in the community lately to make streaming swaps the default, because they're just so much more effective and they're so much more beneficial for the trader, for the swapper. The idea is just like, let's just make it default. It hasn't happened yet. It's still by default. It is the regular swap kind of scenario. But then again, it also depends on the UI that you're using and how they kind of like transmit that message to the network to say, hey, I want this Bitcoin. I have this Bitcoin and I want this ETH, and here are the specifications of the OF addresses on the ETH to, and how much ETH I want to get on the other side, and I want to be streaming or not streaming, or streaming for 5 minutes but not 10 minutes. I mean, you can specify it. It's pretty flexible. You can do a lot of things with it.
Okay, I didn't realize that it had come so far. That is absolutely amazing that you can that they can do that. All right, now I'm going to selfishly change the topic a little bit to the product that I'm most interested in when it comes to THORchain. And I don't think I totally understand now that you've explained that to me why streaming sats is what you wanted to talk about first, because it should be. The part that I'm really excited about this and have been since I first heard about it is the ability to earn a yield on my Bitcoin. And so I would love to hear a little bit more about that. How long has that been going? Have I had any headaches, any things I need to be worried about, any gotchas? Share with me a little bit about what's going on there, and I'm sure I'll have some pointed questions after that.
Yeah, so it's been going on. Excuse me. Apologies. I think it's been live for, I want to say close to a year, give or take some. We call it savers. It's like kind of the terminology. I kind of prefer the term interest accounts, but I couldn't sell the rest of the team on that particular term. But so we call it savers accounts. And effectively, what happens is we have a Bitcoin pool, right? That's comprised of two assets. Rune is the one, and Bitcoin's the other asset, right? In the Bitcoin pool. And so you are basically just depositing just Bitcoin, not the Rune side, just the Bitcoin, right? And then you're only being price exposed to the Bitcoin side. So Rune's price can go up and down, up and around. It doesn't really matter much to you. You're not taking on any Rune exposure. You're just taking on the Bitcoin exposure, right? And for doing so, the rest of the regular LPs want to take up both sides, are taking on your IL. They're taking on your risk of that IL in a manner of speaking, right? And for doing so, they get a higher yield. So as a saver, you're not going to get as much of a yield if you were dual-sided. You can get, maybe half the yield or a quarter of the yield, depending upon market conditions. But you are giving part of your yield to the regular LPs for taking on the additional risk that they're taking on to support that particular feature. Does that make sense?
It does. And just for those at home, IL stands for impermanent loss.
Yes, correct.
Okay. So in the THORchain world, there's the ability to do what's called dual-sided, interest bearing or savings or interest earning accounts, meaning you can put in equal amounts dollar value of, say, Bitcoin and Rune. You deposit that in there. While it's in there, you're earning a yield on a daily basis or so.
Yep.
That was around for a little longer. Then you guys came up with a way to do it with people can put in Bitcoin only or Rune only or Ethereum only. So they don't have to worry about the Rune token. They may not be a believer in the project, or for whatever reason they don't want to hold Rune. That's okay. Put in your Bitcoin and start earning a yield on it. That's okay. And so that's there. It's working. Now I know there are some caps that you have that and is that typically at its cap? Like, is it typically full?
It fluctuates, right? So for example, like I mentioned earlier, Rune's price has been doing very well, right? It's been forming much higher than Bitcoin is, or Ethereum, for example. It's one of the highest performing assets in crypto, like at least in the top 100, reasonably market capped, assets. And so because of that, the synth utilization or the amount of percentage of synths in the pool goes down because Rune's price is increasing. So the value of the LP side, right, or the dual side is like increasing in value, but the Bitcoiners on the other side are, more or less staying relatively the same, right? And so it can fluctuate, in different degrees based upon people who are, adding or withdrawing liquidity, the price movements of Rune versus Bitcoin in terms of like relative to each other, how much like moving up or down, whatever direction that is. That's pretty much like the two primary forces that push it up or down. And then on top of that, to add a kind of third layers, that the protocol itself has, a bunch of Rune. Like the network itself has a bunch of Rune. I think I'm going to say like 34% of the supply of Rune is in the reserve. And we call that to be the POL, the protocol owned liquidity. So when the synth utilization gets like a little bit too high, the POL just kind of deploys itself as an LP of the pool to support the LPs and give more liquidity on the LP side.
Okay, understood. So there are definitely times when you just simply cannot deposit Bitcoin because the cap has been reached. And there are times when it's available and you can. And from judging from what you said and the rapid price appreciation of Rune recently, now is one of those times where you can put in some of Bitcoin, Ethereum, et cetera, et cetera.
I believe so. Yeah, I don't believe it's locked down. Most pools have space.
Okay. And when you do that, there's no so in those savings accounts, there's no timing. There's no minimum time in which the money, your native asset, must be deposited. You could put in Bitcoin, you could leave it there for 1 day, 10 days, 100 days, 1,000 days, put it in there, and you just earn your interest. Does the interest actually come out into your account, or is it just stay in there until you're ready to withdraw all of it?
It stays in until you withdraw, right? And you get back whatever assets you put into the network, right? So if you put Bitcoin in, your yield you get back is Bitcoin. If you put in both Bitcoin and Rune, then the yield you get back is both of those assets. So you generally will get back whatever asset you put in, and plus whatever the yield is in that same asset.
Gotcha. And typically, just using your experience, having watched it for the last year or so, typically those yields are around 2 or 3%. Is that around what they were about for Bitcoin? And
Yeah. Last time I looked, I'm going to bring my screen now just so I don't give false information on this. For Bitcoin now, it's about 2.5, 2.3%. Ethereum is about 5. USDT is actually sitting at a 10. USDC sitting at 11. AVAX sitting at about almost 3. Litecoin's at 5%. Some are 15, 13%. I mean, they're pretty wide ranging, and none of these yields are guaranteed in the sense that like it's a hard 5% yield continuously all day long for the rest of your life. No. It's purely based on market sentiment, right? And so the reason why the yield is so high on as a saver as well as an LP is because we had that big burst I mentioned earlier of like huge trade volume for like hundreds of millions. Like we have the trade volume of like a pancake swap or a curve, like massive trade volume, but our TVL is about like a fifth or a sixth the depth of those dexes, right? Mm-hmm. So we have a lot less mouths, like a huge revenue coming in, but a lot less mouths to feed in a matter of speaking, right? And so because of that, the yield is relatively high than other things because that's just the way the math works out. That's real yield coming in for people actually doing trades and swaps. Even the block rewards we have is, I think, maybe about 50% of the yield. The total system income of the protocol is half the block rewards, half from people swapping and trading and paying fees and that kind of thing. Which that in itself is actually quite a remarkable, accomplishment. Usually it's like 90%, block rewards and maybe 5 or 10%, swap fees and whatnot. So we've just had so much volume passing through the network that we just produce a lot of revenue, and there's just not that many people to pay it out to, relatively speaking.
Gotcha. Let's stick on those caps for a little bit. Those caps exist for a reason because I'm guessing it would make the system unstable if the Bitcoin side of the pool got too big. That would make the system, and the price of Rune crashed. There would be something bad would happen. I'm not sure exactly what it is, but something bad would happen. Okay.
Yep.
So you've probably chosen a pretty conservative number where that cap is. I'm guessing is what's happened. And in times where price of Rune goes up, now people can put in more Bitcoin. If the price of Rune goes down, as long as it doesn't get below that very conservative number, all things are happy and everyone's smiling. Can you help me understand let's say that conservative number was not conservative enough?
Yep.
What would happen?
What would happen? Okay, so basically the LPs are backing the deposits of savers. Like they're getting paid for it. They're there to support it, and they're the ones taking on that risk, right? So theoretically, like from a purely mathematical perspective, if the price were moved very harshly, one particular, like Bitcoin goes like crazy up, like and Rune goes crazy down for whatever reason, what would happen is the worst case scenario is that the LPs would basically get zeroed. Right, and they lose their value because all their value would be more or less be given to the savers. Now we have a series of protections to make sure that doesn't happen. For example, the yield that a saver makes is relative to how much savers are in the pool. What percentage of the pool is from savers? What percentage of the pool is from LPs? And the more heavier it is on the savers, the less of the yield they're getting, and the more the yield the LPs are getting. So savers, as like the savers kind of grows, or it's growing too fast, let's just say hypothetically, then savers like, well, my yield has gone down significantly. Maybe I don't want to be around anymore. And they go ahead and withdraw. And then the LPs, they're like, well, my yield is actually going up. Like actual yield, because I'm getting a higher percentage of the saver yield getting put into my pocket. So I'm getting the yield of my LP position plus the yield of the saver position relative to how much is there. So you have this kind of counterbalancing kind of effect of like, yield naturally goes down, or actually will literally go to zero for savers if it gets too heavy, right? In a matter of speaking. Gotcha. There's another thing I've been wanting to do, and it's not in the code today, and I've been talking to the community about it for a while, about setting like a hard backstop, so that if it gets beyond a certain figure, right, which maybe that number is 50%, maybe it's 60%, to be TBD. But the idea is that at that point, if it gets way too heavy, then savers would withdraw at a haircut, right? So that we limit how much liability the LPs can take on, so that they have. I know I'm taking a lot of liability, but not like unbounded liability where like I could go to fucking zero. Like I don't like that personally. I don't think it's very good. So what I'm trying to advocate for and change within the protocol design is that if it gets too hard too fast, then savers should just leave. And if they don't leave and it goes beyond that kind of like figure, that line in the sand, whatever that is, then you can go ahead and leave, but you're going to take a haircut, right? Instead of getting one Bitcoin out, you're going to get 0.9 or whatever the figure it is. So that there is a kind of like a hard kind of line, like as long as you're below this line, everything's fine. Don't worry about it. But if it gets too close, maybe you want to start withdrawing, right? To create the proper incentives for savers to not overwhelm the LPs.
Gotcha. Okay. And just so I'm understanding all the so let me say a couple things back to you to see if I've understood that correctly. Yep. The way I kind of view it is to steal like a real estate analogy. It sounds like the savers are first mortgage and the LPs are second mortgage. It's like the savers are at the moment the savers are protected above and beyond the LPs. Yep. Now, when you say the LPs lose, are you saying that they are losing deposit value, or are they missing out on yield?
They're losing deposit value.
Losing deposit value. In the instance where Bitcoin went up, Rune went down, in addition to whatever the values were there, because that went up, they might offset. However, there will just be less Bitcoin and Rune available for the LPs. They would have lost some
effectively sound. So as an LP, and this is what we talked about, people like when we implemented this feature, we were very clear and honest about this, is that like as an LP, you are taking like kind of like a leveraged Rune position in a matter of speaking, right? So when Rune performs well, you're gonna like pull value from the savers because they're not exposed to it. So you're gonna like as a saver, you're not losing, you're staying at that one Bitcoin, but because your shares of the pool is increasing in value, but the Bitcoin value is not, the LPs kind of like take value from the savers in that scenario. And conversely, if the Rune value is going down, the savers are kind of pulling from the LPs in the other direction. So it's that door swings both ways, to be fair, right? And you just have to make a determination of what do you want. Do you want a higher risk, higher reward system, right, where you have that additional yield and all that kind of stuff, or do you want the lower risk, lower reward system, which is what savers is? And then and everybody is a different person. They can say I like this or I like that, and there's no, if you're a degen, you want to degen it up, great, have a good time. If you want to play it more safe and play like a little less yield, a little more safe, okay, good. That's your style. That's your approach to this.
Okay, understood. Where was I going with that one? Is it the type of thing? Let's say that came to fruition, and there was a situation where LPs were down. Is it something where they could write it out? Or is it once the losses occur, the losses occurred, or they only actually lose if they do a withdrawal at that time?
Yeah, it's unrealized losses at that point, right? Because
unrealized losses.
Like it's the same thing as like IL, right? IL is the same thing. You could have a situation where one asset moves up in value relative to the other asset, and you have experienced all this IL, right? And then the next day, the price returns back to where it was yesterday, and then you have no IL, right? You have no losses. Right. And that's why the impermanent loss comes from. Impermanent meaning that like when the price moves away from, like, two assets diverge in price, and then the next day come back together again in one form or another, then whatever IL you experienced yesterday has just been wiped from the books today. And this is conceptually very similar to that. Like you can get a bunch of losses today because Bitcoin's price is pumping, and the very next day Rune pumps, even more so, and all that losses just gets wipe right back out it, and now you're in the green in the last 24 hours.
Gotcha. Okay, very good. All right, great catch up on saving. Thank you very much for that. Now another feature. There's the features coming out of Rune. It's just so good, so crazy, especially for long-term Bitcoin holders like myself. So now, what about I want to go buy a Lambo with my I got lots of Bitcoin sitting about. I have never sold it. I want to go and use that for a lifestyle. We'll call that a Lambo, but I don't want to sell my Bitcoin. Okay. Talk to me about what I want to go. I want to use my Bitcoin as collateral, borrow USDT against it. Can you talk to me about that service that THORchain offers?
Yes. So we wanted to kind of get into the lending space a little bit, just because the foundation of what we built is so flexible and allows us to do so much that nobody else can do, right? So us launching lending, for example, it allows lending to exist in a decentralized way for Bitcoin, for layer one Bitcoin, lovers. Like, and I'm one of them. I'm Bitcoin lover just as you are. And so we went this kind of lending route. And the biggest problem that I find about lending personally, and I think anybody who's actually taking out a loan knows exactly what I'm talking about, and that is that, like, it's so dynamic, and that what the risks are, right? So when you take out a loan in like Ethereum land, let's just say, and Ethereum's price is dumping because macro events or who knows what, right? And you're like barely sleeping at night because you're like constantly checking like the ETH price and make sure you're not going to get liquidated.
Have I been liquidated? That's the thought that is in your head 24/7.
Yeah, have I been liquidated? It's very stressful. I don't know if you've ever done it yourself or not, and I think anybody who's done it knows exactly what I'm talking about. It's very stressful because you're just like constantly. I had a friend of mine. I got married a while back, and a friend of mine was there, and he was panicked the entire time because he took out this huge loan to buy a house, and he's like, "Oh my god, oh my god, oh my god!" It was terrible. But I knew where he was coming from, right? And then the other thing that's really terrible about lending in general is that interest rates are variable. They can be 5% one day and 35% the next day, right? And to be able to open up a loan in a way that you have to have the capital on hand to close it like now because the interest rate has ballooned up to 35 or 40% is not that useful, because like you took out a loan to do something with it. Like if you have to have it on hand and have it be liquid, right? Like if you want to buy a Lambo's not very liquid, right? You couldn't just sell the Lambo and pay off your loan, blah blah blah, if you needed to, right? This is not that simple, at least. And so one of the things I loved about our lending design, and our lending design is very novel. It is very new. It's structured very differently than how you would normally think about DeFi loans today. So you kind of have to start with the mentality of like, forget everything you know about DeFi loans. None of that applies to this equation. You kind of have to
I'd go further. Forget everything you know about loans.
Yeah. Yeah. It's very different and very novel, right? And so what makes it so unique, other than just supporting Bitcoin and Ethereum, and theoretically we could support Doge and AVAX and BNB and arbitrarily any asset in the world as collateral. But beside that, I mean, that by itself is a pretty massive contribution to the industry, I would say. But putting that aside just for 1 second, what makes it so unique is that it's 0% interest rates, fixed 0% interest rates, right? So the interest rate's going to be zero now, it's going to be zero tomorrow. There's no liquidations. So even if the value of your collateral drops below the value of your debt, normally that would cause insolvency and call the entire DeFi protocol to collapse upon itself. Because this is designed so differently and it's structured so differently, that kind of mentality, that kind of like way of thinking doesn't apply. Same thing if you were to say to something like Elon Musk and say, "Hey, your car won't work because it doesn't have any pistons. It won't be able to drive forward." And you're like, well, no, it can drive forward, but yeah, you're right. It doesn't have any pistons. That's true. But we don't need pistons because we have this other mechanism over here, whatever. So it's kind of a little bit like that. You think that's what I need to like deprogram yourself about how does a car engine work? Oh, you kind of forget about pistons and carburetors and exhaust pipes, and you don't need all that kind of shit when it comes to electric cars, right? You have to think very differently, and so it takes a while for people to wrap their brains around it because it's so structured differently. But anyways, 0% interest rates, no liquidations, and no expiry of your loan, right? So you can go ahead and open your loan, leave it open for 10 years, 20 years, 30 years. I don't care. It's all great. And so because of that, it's so predictable as a financial instrument. You can go ahead and buy a Lambo. You can go on a vacation. You can buy a house because you know that you won't get liquidated, right, tomorrow because of the ETH price or the Bitcoin price, tanked or whatever it was.
So it's just I mean, I'm one of those people that I am struggling to get my head around this.
Yep, you're one of everybody's like that. It's just,
I'm in good company.
To be fair, you're in good company. I've had this conversation I don't know how many times with how many people, but it does take a while. Most of the time, and this is the funny thing, almost every time I've talked to like somebody like a professional econ person, like somebody at a VC, for example, or a research firm, whatever, initially their initial knee-jerk reaction is there's no way this could work. There's no way this thing could, no way. This sounds like too good to be true. And nothing. And then you just give them a week to mull it over and like read through the docs and then they come back a week later and like, I get it. I know why it works. But it always just takes like a week for people to get their brains to get like wrapped around it for some reason. It's kind of fun.
That sounds very familiar to when I first learned about Bitcoin. It was Trace Mayer who sat me down and told me about it. And my knee-jerk reaction was this: this magic internet money cannot work. Absolutely not. It cannot work. All right, tell me about it. I'll tell you why it doesn't work. Same thing.
Right. Because
like a week later, I was like, holy shit, this is the greatest thing in the world.
And the reason why that is because when you first hear about Bitcoin and you don't have the context of Bitcoin and how it works and its mechanisms and these kind of things, it doesn't really make sense to you in the traditional finance world. Like this puzzle piece doesn't fit anywhere. That's the reason why I rejected Bitcoin the first time I heard about Bitcoin. Like I think everybody does because it doesn't make sense in the context of how you think about finance or the world or how money works. Or initially it doesn't make sense to anybody until you actually like spend a week or a month or whatever it is to read and understand Bitcoin and how it works and why it works. And then you're just like, wow, this is actually one of the most transformative technologies this world has ever seen, Bitcoin.
Yeah.
Right. And that's why I'm like, when people tell me that, there's no way this lending thing could work, like, okay, maybe you're right. It is a new idea. It is an experimental concept. We're trying it on a very small scale just to kind of like dip a toe in a manner of speaking. And maybe it's not going to work out. Right. I can't purvey the future. Right. But if you understand the mechanics at play and why it could work, that might shift your mentality. So I always encourage people to like just take the time to read and understand before you just dismiss it outright.
Gotcha. So if you are willing to, and promise not to slash your wrist for having explained it for the 10,000th time, if you'd like to have another crack at with me and try and help me understand it, I would really appreciate that.
Yes. Okay. So here's how it works. This is structurally what happens, right? Let's say you want to open up a Bitcoin loan, right? And you want to get USDT, right? And the asset you get.
Yes, and just from memory, I believe it was like a 50%. If you put in $1,000 of BTC, you can pull out $500 of USDT. Is that correct?
Yes, it's a little bit. It's more dynamic than that. It shifts from on the 50%, and then it can drop even lower depending upon the utilization of the feature, right? So the more loans are opened up, the more popular it is. Right, the less you get back in debt, right? Because it's just reacting to the demand of the it's high demand, so we get a better deals for the protocol, right? As the demand increases.
But once you've taken the loan, that loan is fixed for you at those ratios.
Yes, correct. And once you've taken the loan, it's open, and you can open another one if you want to, or you can close it. There's a 30-day waiting period before you can close a loan,
that's an interesting feature. So you can't close a loan within 30 days.
Yes, and the reason why that's there is primarily just to make sure that people are here for long-term loans. That's what we want to attract. We don't want to attract degens who are just open and just like doing crazy emotions daily, whatever. We want people who have a long-term investment or a long-term view of their loan. Like if you want to buy a Lambo, you're not going to do that for like 3.5 days. You're going to probably do that for a longer period than that, for example. So structure what happens. Okay. So you want to take up a Bitcoin loan, you want to get USDT, right, as your debt asset. You deposit Bitcoin to the network, layer 1 Bitcoin to a BC1 address, right? The network basically sells the Bitcoin and buys Rune. Rune is our own asset of the network. And then it swaps that Rune out into a derived asset, which is what we call Thor.BTC, but it's basically a derived asset of Bitcoin, right? And it burns that Rune to mint the derived asset, and the network holds it on its own wallet. While the loan is open, it's holding it as kind of like an accounting mechanism, if you want to call it that, or maybe an IOU is maybe another way to describe it.
And sorry, question at this point: that derived BTC, is that the same derived BTC that is used in streaming swaps?
No, that's a different thing. There's a few different types of assets on THORchain. Yes, it's very complicated, and I'm sorry that it is, but there are different assets used for different cases. This is a derived asset. It's a completely different asset. It's solely used for lending, at least at this particular time. We might want to use it for perpetual sometime in the future, theoretically, maybe. But for right now, it's only utilized for this feature.
Okay, cool.
Yeah. So you're selling your Bitcoin, you're buying Rune, and then you're burning that Rune, and then you're minting the derived asset, right? And this becomes like that derived asset becomes more or less the liability of the protocol, because most time when you open a loan, there's somebody that's the borrower, there's somebody that's the lender, but in this situation, there's somebody that's the borrower, and the protocol itself is the lender, right? And so once you've opened up that loan, and in terms of you deposit the Bitcoin, it sells it into Rune, mints the derived asset, and then it mints some Rune to give you back your debt, right? So to use the 50% ratio you mentioned earlier, you give us $1,000 worth of Bitcoin, right? And then we mint $500 worth of Rune. We burn $1,000, and then we mint 500 back. So there's a net negative of $500 in terms of buy and burn pressure of the Rune asset, the Rune token itself. So we mint a bunch of Rune, and then we buy the USDT that you're looking for, right? Or maybe you want get ETH as your asset, or Bitcoin, or it doesn't really matter. From the network's perspective, the debt asset is always denominated in dollars, denominated in we call it an asset called Tor, but just think about it in dollar terms, right? So you put in $1,000 worth of Bitcoin, which is, let's just call it 0.1 Bitcoin for easy math, and then we give you, $500 worth of debt, right? And so once you pay that back at some point in time, it's the same thing that happened that when you open the loan, just in reverse order. So now you're burning the debt to mint the collateral. Whereas before you burnt the collateral to mint the debt. Generally, collateral is bigger than debt, most commonly at least, right? They would make sense. Yeah. So you are burning the debt, and then we're going to burn that Thor BTC we mentioned before. We're going to burn it into Rune, and then use that Rune to buy 0.1 Bitcoin, yeah. So there are fees that you're paying on the way in, and there's fees that you're paying on the way out. But during the life of that loan, there are no fees.
Mm-hmm. Understood. Yeah. Okay. So then that part I understand. Yeah. So now, why, if the value of Bitcoin in that example plummets, why is the THORchain ecosystem not insolvent?
So imagine that the Bitcoin price, say that's at $1,000 to start. Mm-hmm. We have $500 worth of debt. I'm not sure people can see my hands because I'm not sure if you're an audio show or not. But
no, we can. We're visual.
Okay, good. So hypothetically, say the Bitcoin went down to like $100, just like tanked from $1,000 to $100.
Yep.
Now, first of all, if that were to happen, you're not going to close your loan, right? Because yes. Why would you spend $500 to buy $100 of Bitcoin? That's just like nonsensical, right? Who the hell would want to do that ever? But hypothetically, let's just say you had a few marbles short today. You woke up without your coffee and you weren't really thinking right, right? So now we burnt a bunch of Rune, $1,000 worth of Rune when you first opened your loan, and now we got to mint back $100. Right? From the protocol's perspective, we just made a profit from that scenario. We didn't lose. We're not insolvent like a compound and Aave would be in this hypothetical scenario. Instead, it's actually beneficial for the protocol when that happens, right? In that scenario, if you got $500 in debt and $100 in collateral value, and you were to pay that back, well, now you got to burn the 500 to mint 100, right? Now you're creating an additional net buy and burn pressure of $400 in this hypothetical scenario, right? So in a bear market, generally speaking, a lot of loans won't be closable, right? Because the collateral is going to drop below the debt. The debt's always in dollar terms. It's always more or less stationary relative to the dollar, right? And so you go into a bear market, and the value of this drops down to to be relatively, because bear markets are like 80% down or whatnot, depending on the asset. Mm-hmm. And so most loans won't even be closable in an actual bear market, and that's great for the protocol because hell, you gave us a bunch of money, we gave you a little bit back, we're in the profit, right? We bought and burned a bunch of extra Rune and caused all this buy and burn pressure on the asset to help make the Rune asset more valuable because more buy pressure and there's less supply, right?
Gotcha. So I see where that was a benefit to Rune. But what if the value of Rune dropped significantly as well, even more so than the Bitcoin?
Yes. So this is the scenario that is bad for the protocol, to be fair and to be clear in all these things. So there are you can almost think about this thing like a free put option. It's kind of similar to that. It's not exactly the same, but it's kind of similar. And in a free put option, somebody's going to be winning and somebody's going to be losing. And in put options in general, there's two entities involved in this situation. One wins and one loses. But that's not how this works. This is more like a 4-quadrant system where there's like win-win, lose-lose, lose-win, win-lose, right? Because there are scenarios where Rune outperforms Bitcoin, right? And Bitcoin performs also well. So the borrower wins. He got what he wanted. He kept his Bitcoin. The Bitcoin price went up. Like he walked away a happy camper, right? And it's hypothetically speaking, let's just say that Rune outperformed Bitcoin, which is a common thing to happen in bull markets, right? Just because Rune's a much smaller market cap than Bitcoin. This is a common thing in traditional finance. I think it's called like the small cap theorem or something like this. That small market cap assets tend to move higher in bull markets because there's less economic pressure that's required to push it up. And you can like look through the history of crypto and you will see that Bitcoin oftentimes is one of the worst performing assets during a bear market, right? That's not because Bitcoin sucks or blah, blah, blah. No. That's just because Bitcoin's massive in market cap. It takes so much like energy in a matter of speaking to move it up 10% versus something like, Rune. It takes a lot less because its market cap is 100x less or whatever the hell the number might be, whatever it is. So it takes a lot less pressure. So in bull markets, it's natural for altcoins in general to outperform Bitcoin or outperform ETH because of their small market cap assets. And so in a bull market, it's much more likely that Rune is outperforming Bitcoin, which has been true throughout the entire history of Rune's existence in bull markets. Conversely, the where you run into a problem is when you go into bear markets, because in a bear market, Bitcoin will outperform the alts, right? For the same kind of reasoning, right? Mm-hmm. It takes less energy. It takes more energy to push it down, whereas everything's going down. So these things are moving down harder and faster, right?
Yep.
But that's the scenario where the protocol takes on risk. And the bear market scenario where Rune is going to be naturally underperforming Bitcoin. And I can pretty much guarantee that's going to be happening in the next bear market. I could without hesitation, I say that. Mm-hmm. But there's this asymmetry happening in the protocol, which is really important. In the scenario where it's in bear market, well, because Bitcoin's price is going down and Ethereum's price is going down, that you can see a lot of times where the collateral value is actually going to go beneath the value of the debt. Mm-hmm. Right. And if that's the case, well, nobody's closing their loans, are they? Because why the hell would you spend $500 to buy $100 of Bitcoin? That's a silly move. And if you did that, it actually would benefit the protocol even more if you were to actually do that. But so if you want to do that, go right ahead. I would enjoy it. But most loans will be underwater in a matter of speaking, and they won't be closable. And a time when it's the most riskiest for the protocol for loans to be closed. Right. Not to mention that in bear markets, nobody's really doing anything. Nobody's opening loans. Nobody's closing loans. Nobody's swapping. Nobody's LPing. Like just the activity in general of crypto is like way down the fucking gutter during the bear markets versus the bull markets where everybody's like excited. There's so much euphoria. People are trading. People are, doing their degen strategies, what have you. Right. So because of this asymmetry that on the upside that rule has a natural tendency to outperform larger market cap assets just because it's smaller size. And in bear markets, you won't be able to close a lot of your loans. That creates, and not to mention, people don't really want to close loans. Like, would you want to close your Bitcoin loan if it was down 80%?
So you said you weren't able to close it. Is that true, or you're just saying that people wouldn't want to?
You could close if you. The protocol doesn't stop you from closing it.
Yeah,
but people wouldn't want to
incredibly
because
stupid. Yes.
You'd be incredibly dumb to do. And to be honest, like I said before, like if you did close it at that point, it doesn't even matter if Rune is underperforming Bitcoin by 1,000x. It's still beneficial to the protocol to do that because again, you have to burn the debt and mint the collateral, right? And so if the debt's $500 and the collateral is $100, well, we got to burn $500 to mint 100. Obviously, there's a $400 difference there, and it's going to net burn a bunch of Rune. It doesn't even matter if Rune's price is in the shit or not at that particular moment, right? But because there's this strong asymmetry that nobody's really interacting with crypto very much in the bear market, not to mention that a lot of these loans are just going to be underwater and not going to be able to close. I mean, they can close it if they want to, but they're not going to want to close their loans. That means that most of the loans are going to be opened and closed in bull markets, which is the most opportune time for the protocol to see that. So that's part of kind of like some of the assumptions that's being made, which is why we're testing it out in like a very small kind of dipping a toe in this idea and just trying it out for a period of time. validating our design ideas, validating their assumptions about the market economy that we believe to be true, but we don't want to validate it, make sure it's real before we actually lift up the caps and allow people to really kind of move in the system.
So what are the caps at the moment?
Right now it's it's approximately maybe like 1% of the supply of Rune could be used to open a loan, like just like the amount of Rune that could be bought and burnt from the market. So you're not going to see like a huge price change in Rune's price from 1% being engaged, right? It's just you're not going to see a huge one. But that's not the point of this trial, right? It's not to cause a huge price change in the trial context of this, right? But you're also not going to see a big giant collapse of the protocol from a measly 1%, oh, this experiment didn't work out. We tried the small scale. It didn't work out. So we'll sunset the feature and carry on, right? Or it worked extremely well. I mean, so far, it's actually worked extremely well. Right now, if you were to close, like if 100% of the loans were to close right now, every single last one of them were to close right now, we would have net burnt half the Rune that was bought and burned from the network, right? So like you would have been negative 1 million Rune from the supply, right? So it's already in a very good state now. And largely because we're in the beginning of a bull market and all that kind of stuff. But like so far, it's performed exactly as I would have anticipated in terms of like the performance of the code and the logic and how markets react to these things. Like that's directly on point so far. But it's still early, to be fair, right? We won't really know until this design actually works or not until we've gone through a full bear and a full bull, and then we'll know. Then we can know from the actual real market data whether this thing works or does not.
Gotcha. You mentioned currently the cap is 1%. Is that 1% of the dollar value of Rune? So if the price of Rune goes up, space is made available, or it's 1% of Rune period?
1% of Rune period. So if Rune goes up by 7x, for example, then the amount of Bitcoin that could be taken in as loans also goes up.
Okay. So therefore, a same kind of argument as before with the recent price appreciation of Rune, probably there is room available?
Yes. There's, I think it's like halfway full at this point, or something like that.
Okay. Very, very interesting.
Yeah.
All right. So now my next, there I've asked you about a bunch of features, and these features are just absolutely mind blowing. Like for people at home, if you haven't kind of followed along, like the history of the crypto journey, like what Chad and the team at THORchain have done is, to me, absolutely mind blowing. Like there's the Bitcoin mind blow, and then there's the THORchain mind blow. They're like the two big mind blows in this. So nothing else compares to what you guys are doing.
Yeah, thank you.
So now, are there any other features that I haven't asked you about that you want to share or talk about or raise? And if you haven't, that's totally okay. But I just thought there might be something I haven't heard about.
No, I mean there's always something in some sense, but right now we're predominantly focused on just scalability. We saw this huge adoption in a very short period of time. And so we're making a series of changes just to like to improve the efficiency of like THORchain itself to be able to trade much higher volumes much more quickly, right? So that's our current focus, just like scaling it up. Once we get kind of through all that stuff, the intention is to go back to a feature called what we call memoless transactions, which is basically a fancy way of saying that you can trade with THORchain from any wallet in the world. It arbitrarily no longer matters which wallet you're trading from. It could be anything you could think of. It could be a brain wallet, a paper wallet, doesn't matter. You could trade from any wallet, in the world to do a transaction or trade or swap or deploy liquidity or whatever it is you want to accomplish or open up a loan. Anything you want to do, you could do that from literally any wallet in the world. That's one thing we want to be working on. And then
just if I have a follow-up question on that. Sure. So as it stands now, a wallet needs to integrate with THORchain.
Correct.
In order, yep. Okay. But what you're saying is a wallet out there that has never heard of THORchain has yep. made no UI changes whatsoever.
Correct.
To accommodate THORchain will
Correct.
be able to transact in THORchain.
Correct. That's it. That's exactly what it is.
Okay. Mind blown again. Okay. Cool. Unbelievable. Do you have like a timeline on that?
I mean, the code's already written. It just got deprioritized, to be honest. Yeah. How that more or less works is that like we'll use in Bitcoin speak, since you're a Bitcoin kind of audience, in Bitcoin this thing called operaturn, which not many people may not know about, but basically it's another way of saying memo. Like you can put a memo in a Bitcoin transaction, just call it an operaturn. And so we use that kind of like that memo to kind of like state some data in there that tells the protocol, THORchain protocol, what it is that you're trying, what your intent is, right? I want to get Ethereum, and here's my OX address, and here's this. You kind of like just conveying information in that kind of transaction. But the problem is that most wallets today, almost like probably 90-something% of Bitcoin wallets, don't support the idea of an operaturn. Like it doesn't actually allow for such a thing. For whatever reason, operaturns just never became popular within the Bitcoin community for one reason or another, right? For better or for worse, whatever you want to call it. And so what we're doing is, instead of just saying, putting that kind of like that transaction intent in the operaturn, you just register it online through another mechanism. And this is all just done through a website. You just go to like some website.com. I don't even know what the website will be, to be honest, because I'm not the one building it, but call it like simple THORchainswaps.com. I don't know, whatever, right? And you just input your details. Okay, I have Bitcoin and I'm sending you, 1 Bitcoin and I want to get Ether. You just kind of like, just tell us what you want. And then it'll just generate like a QR code. You just scan it, or you can manually copy and paste if you want to do that too. I mean, whatever you want to do. And you just send the Bitcoin off to the address. With the specific kind of like details and the like the amounts and all this kind of stuff, and we just match that memo that was registered with us through that mechanism instead. So it's another way of registering a memo. Instead of doing within the actual Bitcoin block itself, you're doing it through like secondary methodologies.
Gotcha. Yeah, I can see it. It's just like, hey, expect a message from me, or expect a transaction from me in the next few minutes.
Yes. Here's my information, right? Here's what I want, and then we just connect your wallet to this particular wallet, like information that you provided to us, and say, all right, we've met the match. Let's go ahead and transact and do the thing that you're asking us to do, whatever the hell that might be.
Beautiful. Okay, cool. Yep. That was awesome. I had no idea you had that planned or in the works. Anything else?
Yes. The other thing that I'm actually really excited about is limit orders, right? And I'm really excited about it for more than, by itself, limit orders was really valuable. I think one of the interesting things about centralized exchanges is that you almost always have like a simple UI where you can just it's for your kind of random, newbie to crypto who just wants to make a quick little trade, and they have this little simple clean UI that's not really complicated. And then you also have like the pro UI, right, where you have like trading view graphs, and like you have a staircase of like order books and like live orders, and like the much more like people who trade, right? There's a difference between somebody who's a swapper and somebody who's a trader. Like those two things in my mind are like two different class of individual, both achieving the same goal, but just having a very different like approach to it. And so in order to kind of expand THORchain's usage, expand people like the market share of who wants to utilize THORchain, I would love to see us move away from like the simple kind of swaps to like more professional, like limit orders and things like that, right?
And limit orders allows for order books.
Exactly, order books, exactly what it is, right? Order books. And what's really, really, really interesting about this that is unique to us. We were talking before about streaming swaps, right? About it takes time and just a big trade into little tiny trades, and then it makes a tiny trade every block or every other block or whatever the hell the rate of it is, and then you execute it over time. But if you have an order book where there's like limit orders and even an arbitrage bot who is maintaining the Bitcoin pool price to match the market price, right? Well, theoretically speaking, when a streaming swap happens, it pushes the price, let's just say pushes the price down because of the direction it's going. But then the order book will say, hey, my fulfillment could be fulfilled now because the price has been shifted down, and the order book kind of pushes it back up again, right? But now because the price has been pushed back up again, that streaming swap can go ahead and push it down, and the order book can go ahead and push it back up again, and back and forth, back and forth, back and forth, back and forth. So now you can get a streaming swap to have 100 swaps, 100 streaming swaps within a single trade, and have all in a single transaction, in a single block, more accurate term to use, all happening in a single block. So now you have the speed, right, of a regular swap of just like a one swap done, out, in, out, done, right? But you don't get very good price execution, or you get the streaming swap, which happens over time, but you get much better price execution. Now you get the best of both worlds put into the same trading experience. So now you get incredible price execution, right? and getting it done effectively, theoretically, in a single block, and getting your trade in and out just like that, and still getting 5 bips on your transaction. That would be the next major thing to allow this network to become even more efficient and be able to execute even higher volume at a better price execution than we can even do today.
So that is incredible. To help me understand the significance of that, does like on Sushi Swap and Pancake Swap, do they have order books? Does anybody else in the DEX world have order books?
Some do, some don't. Like Uniswap does not. They're kind of adding it a little bit into Uniswap v4. Like there's a little kind of like tones kind of happening, right? In a manner of speaking. There are some, like I think like I want to say DUIDX is kind of order book based. I think there's like one on Solana. I can't remember the name of it right now, but like there's a handful that do order books. And there's a reason why you generally don't see order books in blockchain. So you don't generally see order books in part of DEX, is because of mathematical computation, right? It's actually really complicated, is computationally expensive to match, this person with this person on their orders, blah, 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 blah. And just having a single pool that people just kind of move between is computationally much more efficient, right? That's why if you were to implement order books on Ethereum, let's just say, it would be very expensive. The amount of gas that you have to pay to execute a trade like that would just be absorbently much more, like at least a multiples probably, in terms of gas fees you'd have to pay, versus just do like an AMM trade swap, kind of like normal thing that you typically see in the Ethereum land. But because the THORchain is built on Cosmos SDK, it has its own sovereign blockchain, right? And we can do more or less whatever. It's our environment. We can do more or less whatever the hell we want, right? To a certain degree, and we can kind of create indexes. And I actually wrote up, again, this feature is actually already coded as well, to be fair. I designed a methodology, a mathematical methodology to be able to find orders that match. I mean, technically speaking, it's not a full-on order book to be fair. It's because you're trading at a specific price that you want to execute, but you're not trading against another order. You're trading against the AMM itself. And so it uses like kind of, it's more like to be fair, it's more like a hybrid order book / AMM thing going on, because you're getting the experience of an order book. You're saying, here's my X, give me Y back. And don't just sit there and wait until Y can be fulfilled. And then once Y is fulfilled, go ahead and send me my Y, whatever the hell that is. So you're getting that same identical kind of experience, but instead of trading against other people's orders, everybody's just trading against the AMM itself, right? And executing whenever the AMM kind of shifts in a way that allows you to execute your trade at the ratio that you want to trade your execution at. It just goes ahead and executes it on your behalf.
Incredible. Time frame on that feature?
The idea is that we would work on like scalability for Q4, which Q4 is more or less coming to an end at this point. So probably we'll see it. At least we'll probably see the memoless transactions thing probably in Q1. Hopefully in like maybe February-ish. If you want to, hopefully people won't quote me too much on this, but I'm just giving my best estimate. And then after that, we'll probably see limiting orders maybe a month or two later.
Okay, wonderful. All right, and then my final series of questions is for the practicality here. We've got a lot of theory, we've got a lot of concepts, we've got a lot of tools. All right, I'm John Q. Citizen. I don't have any experience with THORchain. In fact, I wouldn't even consider myself particularly adept at blockchain. I'm a blockchain rookie. I've signed up to a centralized exchange. I've got myself 1,000 USDT sitting in a wallet somewhere, and I want to start interacting with THORchain. I want to do it in a safe way, preferably using a hardware wallet if that's a thing. And I want to have exposure to all of these features that you have mentioned so far, and I'll say them specifically. I want to do swaps. I want to do streaming swaps. I want to do savings. And I want to do loans. Is there a one-stop shop wallet that will do all that for me?
Yes, THORswap does all that, and it does support hardware wallets. If you got a ledger or maybe a wallet connect, or it supports a handful of different wallet types. But yes, Thor wallet you can do. So you can go to THORswap, not Thor wallet. THORswap.finance is the website. You can go check it out. And yes, you can do loans, you can do savers, you can do swaps, you can do all sorts of goodness.
Okay, you can do all of that right there, and so it's okay. It's an online. It's like I would do it in the browser,
Yeah,
and I could use my hardware wallet to link it to that, so that the private keys are on the hardware wallet, and be
yep,
happy. And I'd be able to experience all of those features in one stop.
correct,
Great.
correct.
Now, I sound like I'm getting greedy, but again, for the newbie, if is there a way from THORswap.finance to go from fiat to the world of crypto?
So THORswap doesn't do that. Thor Wallet, which is a different project, different UI, they have some like kind of fiat on and off ramps as part of their system. I think they operate in like Switzerland or something like this, and I think there's like limitations of 1,000, or I'm not sure the details to be honest with you. But you can go to Thor Wallet and kind of check out what they're offering.
Gotcha. But that's okay, guys. I recommend just sign up to a reputable centralized exchange, do a Kraken, do a Coinbase, do something like that, and
Yep.
then go to something.finance. What was it?
THORswap.finance.
THORswap.finance. All
Yep.
right, that's the place to check it out. Chad, you are amazing. Absolutely love talking to you. Thank you so much for making the time. Thank you for all of your contributions and to the THORchain. It's absolutely incredible. I'll speak to you soon, buddy.
Yep. Thanks again, Matt. Max.